As the so-called most hated rally in history for the stock market and cryptocurrencies continues, this leaves a lot of bears left on the sideline waiting for the next catastrophic collapse. Is it going to come, and how deep could it cut? Let's take a look at that in the charts today, and also timeframes of how we get to these points in the markets. You know what to do. Hit that like and subscribe to the channel if you haven't already. The free crypto and economic report is going out in less than 12 hours. That link is in the top of the video description. Plus, it also gives you a discount for TIA Premium, which is going through a price increase at the end of this month. So if you want to jump on board with our members, then check out that link in the top of the video description. All right, guys, we have a lot to get through. We're going to look at the macro, just recap the view here quite quickly. The news that is coming up, look at where the money is distributed around the world and why that's important, especially if we are paying attention to these news headlines, which come out basically every single day, that change the narrative of the market. However, it doesn't necessarily change the price behavior in the markets. So the first thing that we're looking at is the news for the week. Tonight, we get the CPI announcements month over month, year over year. The CPI is trending down. As you know, as a viewer of the channel, we don't pay particular attention to this to tell us what is going to happen long term in the markets. What this data does do is give us volatility in the short term. So this can lead to some great short-term trading. But in terms of the long term, we've proven that this doesn't make any difference to the cycle. The cycle is the cycle. If it's down, it's down. If it's up, it's up. That has been proven as a fact already, but it does give you some great short-term trading opportunities. That you cannot deny. There is always some great volatility to happen when these high-impact news announcements come out, which you can find Forex Factory under these little red factory icons here. So the US is the major market that we will pay attention to, and that of course is coming out tonight. So let's pay attention to that over the next 24 hours. Now, one data point that we've been looking at and covering on the channel is the smart money versus dumb money confidence. This can be read in a couple of different ways. I've shown you how I use it in the market, so make sure you are subscribed so you can stay up to date with this. But I want to just point out the most recent data that we've looked at through this bear market into this transitional bull market. So we're going from a bear market throughout 2022 with the low coming in October, and now the stock market, which is this black line here, is trending up. The maroon line is the dumb money and the blue line is the smart money. And typically you can see the lows, the dumb money is fearful, so it's at this lower part of the reading, and the smart money is more optimistic at the lows in the market. However, recently we've seen a bit of a shift just in the last few days here, the last week or so. You can see that the blue line, being the smart money, was pessimistic at the tops of the S&P. What we could see recently over the last week or so is the blue line, the smart money, was pessimistic at around these tops. However, the dumb money was optimistic. That optimism has dropped for the dumb money, but started to increase for the smart money. Yet the price basically remains around the same level. So you can start to get this flip or this convergence of confidence in the market, basically resetting the market sentiment while the price remains relatively stable. We have had some moves ups and downs and bank failures and different narratives shift around the market throughout April and now into May, but you can see the price has basically remained the same for the last month and a half. Yet the market sentiment from the smart money and the dumb money has switched places and begins to switch places again, and then basically end up right in the dead middle. So that is just a way for the market sentiment to catch up. And we're also going to look at this for cryptocurrencies as well, and how this plays into the entire market space when we look at where the moves start from. Really key point here, because basically we know that the majority of moves happen in a short period of time. So if you miss the moves, then you've basically lost a lot of the profits. They happen in a few days, and a lot of the time the market is just trying to figure out what it wants to do next. Now, before we get to that in the charts, this one is also really important because we need to understand where the money is. And I'm sure most of us know by now that the majority of the money is controlled by the few, and the majority of the people control very little of the money. So this I find very, very important to remind ourselves time and time again. because all we hear from the news is the economy is broken. Interest rates are going up. People can't afford their homes. They can't afford food. They can't afford energy. Eventually, all this thing is going to collapse. And although I do agree with that the system will collapse at some point, probably in a few more years, that's typically where the bears and the bulls differ. I think that'll happen years from now in a macro sense. In the short term, sure, we can get some capitulations. But the bears are believing that we should have had that collapse in 2022. They believe it was in the first half of 2023. And now they're extending it to the second half of 2023. Why this is important is because 12% of the population controls about 85% of the wealth. 85% of the wealth controlled by about 12% of people. If you have over $100,000 to $1 million, you're in that top 12%. 1% up here and the 11% here makes 12%. If you have over $1 million, you're in that top 1% in the world. Now, unfortunately, this is just the data, just the statistics here. If you're under $100,000 of net wealth, then you're basically in the bottom 87% of the population. Of course, this takes into account everyone in the world, Africa, India, some of the poorest nations. Okay, we're not talking about that. What we want to know is how to invest and understand what is going on out in the world and where that money could be shifting. As the data shows, the majority of people have very little money. The very few people have the majority of the money. That's important to understand, especially when we start to consider what the news narratives are. Now, I'm going to throw a bit of a line out here and say that the majority of people, they typically go with the news. If you disagree, let me know in the comments. But I'm going to throw a line out here because that's typically what we see across the news channels. A lot of the news channels are still bearish. A lot of the media is still bearish. Social media still bearish. They're all waiting for things to go down. Where the smallest amount of money is held is with the masses. So I don't think this is going to affect the markets longer term when you can consider that the majority of the money, the vast majority of the money is with the very few. And why we want to know that, because we want to understand what those few people or the mass of the money is actually doing, which is why we refer to the charts rather than what is going on in the economy. We can't trade the economy. What we can trade is the chart, and the chart is the fact. Yes, there is a lot of bad going on out in the world, but the chart is the fact. And if we wanted to make money, then we got to trade with the chart. And so that leads me to the macro view before we get on to the shorter term stuff for BTC. The macro view here is, well, we're seeing some resistance at around $28,000, $29,000. Bitcoin has tried a couple of times to break past that level, 30K, 31K, but continues to get slammed back down week after week. Tried again a couple of weeks ago, getting to $30,036. We broke back down. So is this the time that we start to collapse and break past these lows? Of course, my opinion is that it doesn't happen yet, or it doesn't happen at all. We have a few key invalidation levels, and this is not me flipping any sort of bearish, but I have to have some invalidation levels because there's no 100% guarantees. I am still very much in the long-term bullish camp. Short-term, I highly doubt, as I said yesterday and the weeks before, that this low in March, that banking crisis low where everything went crazy, is going to get taken out either. If that can't get taken out, then obviously the low here, the cycle bottom, is not going to get taken out. So none of those views have changed. But in the short term, we're seeing some resistance. So we do have to have some sort of pullback. Now, in terms of the upside, somewhere around that mid-30s, that's the levels that we've been looking for, around that $33,000, $34,000, $35,000 level. You can see going back over history, you can see there's been some reasonable support here. We throw it on the candles. That's where the bodies have closed above those levels and then quickly back above them. Then the wicks through the January low into the February low also touched around this level, 33 into about 34, 35,000. To the underside, that's the bottom of the wicks, the bottom of the candles, and also the top of the wicks through here as well. So there's a fair bit of resistance between that high 20s and low 30s that the market needs to overcome, but it takes time. Now we get to the juicy part of this video. So let's have a look at the juiciest part in terms of time. And if you miss these opportunities, you've basically missed all of the big market action. So make sure you do subscribe, hit that like button. I got that segue in. I hope you like that one. Let me know with a little emoji of a thumbs up down below, or give me a peace sign, either or. And of course, this week, next 12 hours, our free crypto and economic report is coming out. So sign up to that. All right, link top of the video description. So the short-term stuff, this is what really matters most. Let's go back and have a look at the previous accumulation zone for BTC, November, December, January, early part of January before the breakout. Then we had the distribution drop into another pump. So it was basically a distribution into a quick accumulation and then a pump. And that looks like what we're going through now. So let's break this down with our back testing and have a look at it on a little bit of a closer time frame, because this will let us know that if we miss these opportunities, we could be left crying because it only happens in a few days here. Okay, so basically going back to November, you can see I've got here 60 days from the low when FTX collapsed. The market went essentially or relatively sideways when you look back on that period. But if you're living through this period, it definitely feels like there is a lot of volatility. Obviously, that was volatility to the downside. The market climbs back up, gets rejected at 18.5. Everyone's anticipating much further downside and almost feel like it's assured that $10,000 Bitcoin was coming, yet it only made it back to $16,300. It started to reaccumulate and then broke out to the upside. So I'm just using a couple of different areas here to measure from, but the main point is the time of the move to the upside is explosive and it's fast. So you want to be switched on for these times. The breakout point that I'm measuring from is the break of the 50% of this zone right here. So the low to the high of the accumulation at the lows. So to give you a nice, clear, objective look at this area. But there is some subjectivity, which of course I'll let you know about as well. The objectivity is you could bring it back to the swing low or use that 50% level. Okay, subjectivity will happen in the next couple of examples here. But essentially, you've got about 60 days of sideways move here. Then the breakout is about 13 days and only 13 days. All right, the subjectivity comes in here where you could say, well, you could go to 17 days or 21 days to get to that next top or even to the next swing top at 25 days. But really, the price action halted at on the 21st of January and didn't really go anywhere for that period. So if you are missing out on those few days, in this case, just short of 2 weeks, you've missed out on the bulk of the move, which is roughly 38% from the breakout point, not from the low, not from anywhere else, but basically from that breakout point where the market really started to get its legs on. Okay, if you bought here, okay, there's a couple more weeks here where it slowly creeps up, but you're not getting out of bed for that tiny little bit of profit here in the market, that 3%, when it's just done the 37%. Okay, so then we move forward to this next period. You had 60-day accumulation, 13-day breakout. So I'm going to measure it from this point right here, basically where the price action came to a pretty strong stop. Yes, one could argue that this part is also included. Up to you if you want to do that. But essentially the market came all the way back down from that point. So that next area is about 48 days. So about 7 weeks in total. You could argue another day here. I'm not going to argue with that. Doesn't really matter. But the main focus is how long these periods of indecision by the market participants takes, and then how quick the move actually is. So this next move, one could argue, is about 5 days where it really started to get a kick on and break that previous top. You could argue it's 6 days. Nonetheless, you get the idea that the move was so short. It was 6 days where the market basically then stopped at $27,800. And then we have now gone sideways for about 53 days. We had a little move to the upside, just like we had last time. The market came back down and then put in a slightly lower low than the previous bottom here. But it never broke down into that next reaccumulation area. So what does this look like moving forward? Well, if we've gone about 53 days, this is possible that we start to see either a move to the upside quite quickly, or here's your up, down, sideways, or you see a quick move to the downside to flush out some of the stops, which are potentially placed underneath these lows at 26.5K, and then a quick flush to the upside. That's exactly what happened back in March on the banking crisis news. So I'm just going to clean up this chart, take a couple of these little lines away so that you can see that we're probably coming towards the end. Probably this week or next week, we will see a resolution here. We'll see a resolution, whether it's to the downside, takes out some of the stops and then starts to move again, or a smaller move and then moves up, or this is the bottom now and we move up. It is an up, down, sideways scenario, but the main thing we know here is that we need to be on red alert. The main thing that we are very confident on, that the time frames are starting to run out. We're at 53 days. Here we're at around 48 days, and the previous bottom was around 60 days, and that was a lot longer because we had the big flush out of FTX. This was a very catastrophic event for the Bitcoin market. So the main thing to note here is don't switch off. It could be getting boring over the next couple of days. And then that quick bit of excitement where everyone gets extremely scared. Not saying that this has to happen. Maybe, like I said, it only moves into this area. But there could be this sort of flush out that people are waiting for, that the bears are waiting for. And you'll see the differences in terms of the greed. You'll see the differences where it comes to the more macro bears are saying, well, this is the time now that we should be heading lower, and they'll be waiting for sub $20,000 levels. And then you'll have the less bearish folk who think, man, anything under 26.5, which is all these previous levels, is a blessing and should be scooped up. Only time will tell which one is right. What I'm saying is stay on alert. There has to be some sort of resolution coming up quite soon. You can see the previous one here, it was a higher low, and this one here was a lower low. You just don't know. And I'm not saying that I have a crystal ball for this, but what my crystal ball says is we're in a macro uptrend, which will have its short-term volatility. And it's up to us to decide at which level we're comfortable with getting into BTC. So this is also helpful for the guys who are saying, I didn't get in, what am I supposed to do? Weigh those opportunities up right now. Look to the percentages to the downside. Maybe we get an extra 4 or 5%. Maybe we get to 25K and that's only 9.7%. But I don't think we're going to go and you're going to get 30% off on BTC. I think there are a lot of bulls and potential slight bears who are waiting for any sort of downside opportunity to scoop up BTC in these mid $20,000 levels. Just when you thought that was a jam-packed video by hitting that like button and giving me those emojis of the peace signs, I wanted to show you this on the S&P as well. So it's a very similar sort of pattern here. These markets do it all the time. Long accumulations, quick breakouts, long accumulations, quick breakouts, or long redistributions, quick breakdowns. The moves all happen very, very quickly, and they only last for a set few days. Same sort of thing here for the S&P 500. You can see we had roughly 35 days. The market was stopping out at this level, basically didn't close above that level again. You see right here, and then dump to the underside to test to see whether supply is coming into the market, how many more people are selling their S&P stocks here, and then we bounced up from that point, and it was a much quicker ride to the upside. Same thing happened again, 35 days, and then we get that move to the upside. Same thing again, we're in this 35-ish day period. Let's see whether it lasts that long, which would take us out to May 23rd-ish, which is what I'm looking for, either later this week in the shorter side, possibly next week, which takes us out to about that 17th, 18th of May as well. And then we finally get some sort of resolution and see if we start to push to the upside, or if the bears are right, we get that push, that fast move to the downside. So make sure you have your charts labeled up. You have those time frames in mind. Things are going to get very interesting, especially with these other news announcements that come out and the narratives that continue to shift the market. Keep watch of BTC, especially over this week and next week. This move has to resolve soon, and we'll hopefully see it give us a nice entry opportunity before we start to head higher. I don't have that crystal ball, but we can stick around on the channel, like and subscribe, bell notification icon, and of course, our free crypto and economic report is coming out to you. Peace down below. Check out that comment in the top of the video description. I'm enjoying the conversation over there, and I'll see you guys at the next video. Until then, take care and peace out.